this could be us. So back to what I was saying. Could be us.
Hello guys, welcome back to Katta. In this video, I will talk about Union Budget 2022. All you need to know about crypto tax. Union Budget 2022 provided much needed clarity on how digital currencies will be taxed in the country. The cryptocurrency gained an immense popularity in India in the last few years. With over 10 crore cryptocurrency investors, India has one of the biggest market of digital tokens. It has been a long-standing demand of the investors to provide a tax framework for the virtual currency investments. Finance Minister Nirmala Sitharaman announced a new tax framework for cryptocurrency investors. Also, she announced the introduction of a digital rupee using blockchain and other technology. She said the introduction of a central bank digital currency will give a boost to India's digital currency. But the big question is, 30% tax is levied on gambling. Does investing in crypto equal to gambling? And every crypto investor is asking the same. The entire scheme appears to discourage people from investing in crypto assets. Now I will talk about what you need to know about the crypto tax as announced by Sitharaman in her budget speech. Let's see. The proposed section 115 BBH seeks to provide that where the total income of an assessee includes any income from transfer of any virtual digital asset, the income tax payable shall be the aggregate of the amount of income tax calculated on income of transfer of any virtual digital asset at the rate of 30%. And the amount of income tax with which the assessee would have been chargeable had the total income of the assessee been deducted by the aggregate of the income from transfer of virtual digital asset according to Union Budget Memorandum. Now, there is some clarity on the taxation digital currencies. Prima facie, it seems digital currencies will be taxed similar to speculative income at 30% flat on a gross basis. Further, TDS will be imposed on payments for the transfer of crypto assets at a rate of 1% for transactions over a certain threshold. Finance Minister also announced that gifts of crypto assets will be taxed in the recipient's hands. The introduction of TDS on crypto transfers will enable the government to better monitor crypto transactions. According to the Finance Bill, these crypto taxation rules will be applicable from April 2023, assessment year 2023-24, which means financial year 2022-23, that is next financial year. Now let us look at each of these points and understand how it may impact the crypto industry. Experts said the 30% tax levied on income arising from the sale of cryptocurrency is similar to the tax rate on winnings from lottery, game, shows, puzzles, etc. Nishchal Shetty, founder and CEO of Wazirex Exchange, said, "The tax clarity is a welcome move. Overall, it's a huge relief to see that our government is adopting the progressive stance of going ahead in the direction of innovation. By bringing in taxation, the government legitimizes the industry to a large extent. The majority of people, especially corporates, who have been sitting on the sidelines because of uncertainties, will now be able to participate in crypto. Overall, it's a positive move for the industry." Same time, the Ministry of Finance has proposed a new clause 47A under Section 2 of the Income Tax Act that defines the virtual digital asset as any information or code or number or token that is not being Indian currency or foreign currency generated through cryptographic means or otherwise by whatever name called, providing a digital representation of value exchange with or without consideration, with the promise or representation of having inherent value or functions as a store of value or a unit of account, including its use in any financial transaction or investment, but not limited to investment scheme, and can be transferred, stored or traded electronically. The same will be for non-fungible token or any other token of similar nature by whatever name called. This is the first time the Indian government has defined a broader digital asset that includes crypto unless otherwise specified by executive order. Avinash Shekhar, CEO of ZepPay, said, "The move to tax virtual digital assets give the entire ecosystem including investors and exchanges transparency on the road ahead. A 30% 30% tax on income from virtual digital assets, while high, is a positive step as it legitimizes crypto and hints an optimistic sentiment towards further acceptance of crypto and NFTs across stakeholders in the country. The government has come a long way in its stance towards crypto from last February to today, and we are confident that this world will herald a new era of growth and innovation for India in a Web3 world. Slapping a 30% tax on income from crypto assets and NFTs. As stated in Sitharaman's budget speech, the Finance Bill 2022 has proposed the insertion of Section 115 BBH, according to which any income from the transfer of any virtual digital asset will be taxed at the rate of 30%. The rest of the income will be taxed as per as the existing slabs. Here is an example to clarify it. Suppose you invest INR 1000 in a crypto asset, say Bitcoin, and sell it for INR 1200 after some time. According to the latest tax proposal, you will have to pay a tax of INR 60 on INR 200 you have gained from the transaction. The same tax rule will apply to the NFTs. To understand how it would reflect on the annual earnings, let's take the example of a crypto user Rohit Kumar who earns INR 10 lakhs annually. Out of INR 10 lakhs, Kumar earned INR 1 lakhs from crypto investments. In such a case, Kumar's income will be divided into two parts and taxed accordingly. Income from other sources, INR 9 lakhs to be taxed at 15% or 20% depending on the tax regime. Income from crypto NFT investments, INR 1 lakhs taxed at 30% tax. Kumar will thus have to pay INR 30,000 tax solely on crypto income and 15% or 20% tax on the rest INR 9 lakhs of income, depending on the new or old tax regime he chooses. Mayappan Nagappan, a leader in international tax practices at the law firm Nishit Desai Associates, said that earlier there was a complete lack of guidelines as to whether it will be a trading income, investment or capital gains, and there used to be a bit of arbitrage. Even for trading income, one could claim expenses, carry forward losses and so on. It was also part of capital gains and hence was treated accordingly. Now it brings in more certainty in a way, but it also brings in the highest tax regime. So what is likely to happen is that if you want to make profits at the highest tax outflow, your investment strategy has to change. You cannot do the high volume, low margin part of trading anymore. The risk will be too high. My anticipation is that the trading pattern will shift more towards investment style processing instead of arbitrage trading. If the trading pattern changes, it may not augur well for crypto exchanges. In recent years, exchanges like CoinDCX and CoinSwitchKuber spend a lot of money to acquire customers. Their promotion essentially tried to lure the millennials to invest as low as INR 100, but the latest taxation means people will hesitate to trade or invest for the short term. In contrast, holders will continue to invest. I think that's what the government wants, said Rashmi Deshpande, partner in direct taxes at Katta and CO. There is a good possibility that only those who are extremely serious about investing in this space will go ahead. Those who are not serious players and doing it for fun won't invest anymore. There is also a big confusion on crypto mining and staking. Interestingly, the budget has not mentioned the mining and staking of cryptocurrencies or how crypto miners are supposed to be taxed. According to Deshpande of Katta and CO, the current 30% taxation only applies to crypto buying and selling and does not encompass mining. Hence, miners are not required to pay any crypto tax until they sell or convert their crypto assets to INR or other virtual digital assets. Also, there is no clarity for crypto startups. Until now, crypto exchanges have been charging 1 to 2% commission for facilitating crypto to INR, and crypto to foreign currency transactions. Their businesses currently pay at 18% GST on the commission earned from their services. But at times, income tax officials have asked them to pay 18% GST on transactions instead of commissions. The union budget has provided no further clarity in this regard. Besides, not all crypto startups run crypto exchanges. Many of them are brokerage firms that buy, sell and hold crypto as part of their service bouquet. Further, some exchanges charge in crypto for providing crypto to crypto transactions. At some point in time, if these exchanges convert these cryptos into a fiat currencies, the 30% tax will be applicable. However, it will not be an viable option if these platforms have to pay 30% tax on the profits made on these crypto transactions. The stakeholders are unhappy with super hike in crypto tax. Badri Narayanan, executive partner at the law firm Lakshmi Kumaran and Sridharan said, the entire scheme appears to remove ambiguity but at the same time discourages people from investing in crypto assets. The announcement of a heavy tax on crypto income has come as a big disappointment for crypto investor, as Sitharaman also gave no relief in case of losses. The Indian crypto community has started a petition demanding a reduction in TDS to 0.05% and lower tax slab in line with the tax charged on the gains from bonds and equities. The petition has been endorsed by 75k users so far, and also a big campaign is going on Twitter with hashtag reduce crypto tax. If the TDS is not reduced, it may be an industry killer. The views and opinions expressed here are only for educational purpose. I am not a financial advisor and every investment and trading move involves risk, so you should conduct your own research when making a decision. If you found this video informative, please share it with your loved ones. And don't forget to subscribe to our YouTube channel for more information like this. So that's all for today. See you soon. Till then, have a great day.